Hello, folks, and welcome to Onchain update for the 22nd of March. So today we're going to look at a couple of dashboards focused on long and short-term holders, and particularly in terms of the realized profit and loss. So you'll know that I love me some realized profit and loss because it's a really good tool for showing sentiment and capital flows. I actually think it's one of the most powerful sets of tools. Now, recently, Glassnode rolled out a bunch of metrics which are specifically realized P&L for long and short term. So long and short term is, again, trying to classify these different sectors of the market based on the probability that they actually spend. Now, as we're near market cycle bottoms, there's a bit more dynamics going on because long-term holders are actually primarily the previous cycle buyers. And short-term holders are disproportionately people who bought the bottom. But over the course of the next 3 to 4 months, that will start to flip back around to the standard definition, which is long-term holders who bought the bottom and are essentially now in a degree of profit. So kind of just a bit of exploration. There's a couple of dashboards here that we're just going to kind of fly through. I am still trying to get my own head around this stuff, so we're kind of going to explore it a bit in live time. But that's kind of the way things are done. So let's get stuck into it. Okay, so we're going to start with long-term holders. So to give you a bit of a context who these folks are, long-term holders essentially 155 days ago, we were in the process of experiencing FTX. If you can believe that, that's essentially where we are. We're just in the process of getting up to that point where the market then collapses. So we've seen the vast majority of people in that prior consolidation range. The vast majority of people up there are going to be long-term holders. Short-term holders are essentially FTX onwards. Just for a nice round number, that's about where we are at the moment. So you can see this is quite interesting dynamic, and we'll see this play out. Note that the long-term holders capitulated the heaviest during the June sell-off. This is when Three Arrows Capital was blowing up. We're looking here at the net P&L. You can clearly see the bull. You can clearly see the bear. Note that the losses started to decay. But a couple of things that I observe here. Clearly, this was a major capitulation candle, but this was very much an event, right? FTX, note how it's a bit more full-bodied. Let's call it full-bodied. This thing here is a sustained capitulation. This is a period of very, very heavy uncertainty. And what I'm seeing here is a huge amount of capitulation. Price was going sideways. So there's a lot of sell side, but every seller has a buyer by definition. So as a result, this sideways price action with a nice decay, a macro decay, and looking at what's going on in terms of the volume of this, it's a good sign that we're seeing a washout, and we all kind of know how that movie played out. So looking at it in terms of net, kind of scaling out to look at the size of this thing relative to previous market cycles, we can see that our June sell-off was pretty much on the scale of 2015. Now, 2015, by a lot of accounts, was one of the worst bear markets that we'd ever had. I think you could basically see by the volume of this red here that we are pretty, I would say 2022 was the most destructive and damaging that we have ever seen. That's my read on things, but I think 2022 is probably the worst bear market that we've ever experienced. And there's a lot of metrics that really signal this is just another one of them. You can see the volume of red. It is quite significant, quite substantial. And you can see the depth that we got to on these capitulation events as a proportion of the realized cap is quite significant. Now, as we move into greener pastures, which is what it seems to be that we're doing, you can also see how pretty consistent these peaks are in terms of the long-term holder profits. So what we're looking at is how much of the overall network are they locking in as a profit on any particular point in time. So this will be a great tool we can come back to as things start to move upwards, starting to look for when we start to get overheating conditions. Now, speaking of these market extremes, you've seen me use the profit-loss ratio, which is literally take all of the profits of the market, divide it by all of the losses, and this thing becomes a bit of an oscillator. Quite noisy when you look at it for the whole market. Much the same as SOPA, long-term holder PL ratio, nice and smooth, very much in this kind of macro oscillator type framework. Now you can see the duration of time that we spent down here during our bear market. It was as deep and as severe as 2018, as deep and as severe as 2015. But you can also see this like progressive path and road, this long, arduous road up to all-time high. Note that as we break the previous all-time high, this is a whole different regime up here. It's just all profit. It's all good, man. There's no one left at a loss. And note that this thing here, by the way, is in log scale. So this is a logarithmic scale. This is a parabola in log space. Long-term holders go into an enormous amount of profit during the bull. We again, back here in our bull market, note the big bearish divergence we had on this metric. And also just note how quickly this thing decays. This first drop off here was, I mean, there's plenty of these that we can talk about, but this logarithmic scale drop off that we saw in the May 2021 sell off, another kind of shot across the bow that something wasn't quite right. And, you know, you can clearly see that 2013 was actually the only other time we had this double pump. This one here just didn't have even the same amount of energy. This one here, I think, was a 400% rally on top of where we were before. Oh, maybe even more than that, 10x. It's $100 and we got up to 1,300. So, you know, anyway, what you can see is that we are in the process of kind of getting back to neutral. So in terms of long-term value proposition, we are quite some distance from the from any kind of peak, so to speak. But as with many, many metrics, we're getting to that kind of transitional period into a kind of middle of the road type market. I thought this tool here was quite cool. This is looking at the momentum. So looking at this thing here, obviously because it's moving in logarithmic space, it can be a bit hard to kind of wrap your head around. So if we divide it by its 1 year moving average, it's going to really just amplify when long-term holders are the most active. Now, long-term holders are the most active, typically speaking, at two different positions. At bull market tops, because they're distributing and selling the most, and at bear market bottoms where they're capitulating out, the last cycle buyers. This one here is looking at the former type condition, and you can see, as with many metrics, the long-term holder, the peak amount of sell side they were doing is as we break the previous all-time high. Same as here. Peak amount of activity is at breaking the all-time high. This is when long-term holders accelerate at the fastest rate there, but they basically go from dollar cost exiting, dollar cost averaging, and as soon as you break the all-time high, the amount, the scale of it that long-term holders are spending amplifies significantly. Same here. As we break the previous all-time high, we get the largest acceleration in long-term holder spending. So it's a very, very classic pattern that we continue to see. That's kind of the defining moment when we're now in the second phase of the bull. Now, as you can see, we are not even remotely close there. We have no momentum whatsoever. So this is kind of a space that we can be paying attention to as we move forward. But this is really a really good signal to say, okay, we are now in a regime shift where long-term holders start to spend at an increasing rate. In terms of their unrealized profit and loss, we're now above the long-term holder realized price, which is sitting at 22,400. So this is obviously, you can see just kind of visually the duration of these. 2015 was a long one. 2019, not quite. In fact, 2019 looks to be the shortest, discounting March 2020. But this was fairly substantial, right? We had a bit of chopping and changing in and out, but we are now above their realized price. And as you can see, it looks very much the same as every previous cycle. So history often tends to rhyme in that regard. In terms of their overall profit as a proportion of their scale, it's still insignificant, right? We are well and truly, we're not even in 2019 type territory. We are seeing basically no profits getting locked in by long-term holders. My personal view is we need higher prices for that to actually happen. When you kind of look around at the world, the folks who have held their coins for a long period of time are actually remarkably stable right now. They're just choosing not to spend. Interestingly, note that the red, this is our long-term holder losses, has picked up on this dip below. These are people who essentially are from this cycle. They saw it rally, they saw the dip down to 19.8, and they panicked thinking that we were going to zero, and they capitulated out. Kind of interesting. Sorry about that. In my excitement, I managed to refresh the page, so we're back in action. Now, the thing that does kind of matter here is this longer-term decay. Note that their volume of realized losses by long-term holders is in decay, same as here in 2018. What we're looking at is basically a flushing out of sellers, a flushing out and exhausting of people who are selling at a loss, which makes sense, right? This is how cycles kind of revert, as you get this exhaustion of sellers. So this downtrend is now well and truly in effect. We're getting the occasional kind of flush out along the way. To be honest, it kind of speaks to a disbelief type rally, right? People are a bit panicky and, oh no, it has to be going lower. I'm going to take this exit. Oh no, I missed the high. I need to sell this low. It very much speaks to a disbelief style rally in my view. So this one here is the sell side risk ratio. This is basically looking at of the long-term holder realized cap. So all the wealth held by long-term holders. So we've got the wealth that they hold. Let's just say for easy math, there's $1 billion and all of the realized profit and loss. I don't care about which direction it is, just absolute value. If we've got $1 million of realized profit and $500,000 worth of realized loss, that's 1.5 million divided by 1 billion. So the more realized value is kind of changing hands on a relative basis. So the more value is getting realized, we typically see that at cycle extremes, like bull market tops. Bull market tops are where long-term holders are realizing the largest proportion on a daily basis of their total size. So here we can see we're at 1.3%. That means that if long-term holders hold $1 billion, they are realizing, what is that, $1.3 million every single day in total value. Low values typically occur around cycle turning points at bear markets because long-term holders have we get these spikes of capitulation here for FTX, but it's really quite small relative to their total wealth. Their total wealth has normally grown because the long-term holders are the ones who are actually buying and stacking all the way down. There's a huge cohort of people who are the true hodlers. So overall, their coin supply is getting larger and they're taking profits here and there. A couple of them are capitulating out. But on a relative basis, compared to how much they hold, it's kind of insignificant. So we are coming off extreme lows, 0.023%. So basically, long-term holders are doing very little, and you can see just how little that. I mean, we're barely at the bottom of this range. So right now, I'm not seeing long-term holders panicking in any way, shape, or form. It is actually quite remarkable how stable they are being. And actually, you can see this here. This is their total transfer volume in BTC terms. You can see it's basically getting up to some local lows. This is a bull market. We're accelerating, but not even close, right? So obviously, the caveat to all of this is that you need demand to flow in to absorb their sell side. And when they start spending, by the way, long-term holders have a reasonable gauge on this market. They're typically not going to sell until it's at a price that they think is reasonable, right? I mean, from my perspective, for example, you just put me through a pretty nasty bear market. I'm sorry, I need a little bit more than 28K. That's just a hard reality, right? At least from my personal position, there'll be some guy who'll sell at 28K, but I'm not giving you 28K after that kind of pain. I need something a little bit more expensive than that. So basically, this is the explosion of demand, but it shows when long-term holders are able to sell and exit and not completely crash the market. Eventually, it crashes the market, but it doesn't do it immediately. You can also see how much, where we see many bearish divergences, we actually didn't see that in terms of the amount of long-term holder sell side. And also note the point. They actually waited until the September rip higher before they really started flushing out. So you can see that they're actually pretty good at picking when is the correct time to exit. We're looking at the smart money here. It's kind of cool to see. Now, this one here is then tracking the percent of their volume that's in profit or loss. Now, what this thing is really good for doing, in particular, I've noticed, is when we switch over. Cycle inflection points, 2015. On the rally, their volume goes from in-loss, capitulation type behavior to profit, and then away we go, right? This was a beautiful signal of a cycle turning point, as it was back here in 2012, as it was back here in 2019, following March 2020. And as you can see, we have not flipped over yet. So this is one of these things that we haven't crossed that long-term holder chasm where they're starting to spend coins in profit. By and large, long-term holders are still sitting tight. And when you kind of put that into the context of the scale of the bear market we just went through, kind of can't blame them, to be honest. Anyway, to my view, we've kind of had this kind of low volatility. We're still climbing out of it. We're not really overheated. There's nothing that's kind of telling me that people are just mass dumping and mass selling. There'll be a little bit of that going on. We'll get a bit of chop and change here and there, but I mean, we're hanging out there at 28,200 and have done for a couple of days now. And there's nothing that's kind of telling me that we're steamy or overly hot. It still looks good. It still looks good. I mean, I can't fault it at this point in time. We'll see what happens tomorrow or today, whatever it is. It's hard to do when you're in Australia. Jay Powell's going to come out and wave his magic wand and give us another number. Probably be a 25, but I kind of feel like that doesn't matter anymore. I think the market's now got a new narrative and a new process, and here we are. The cycles have changed. The table has flipped. Anyway, hopefully that was useful. I will be exploring these metrics a bit more and just kind of getting my head around them. Again, this is it's a live process. These are new metrics, and we're kind of in the process of building them out. So it's hopefully it's a bit of fun coming along the ride and learning along the way. Anyway, I'll see you in the next one. Cheers.